Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse with Bolt Marketing, and we're seeing a red in both grain and livestock futures at least early this morning. And DuWayne, I guess let's talk a little bit about the grain trade. A couple days down, it feels in some instances like maybe this market is trading some of what's going on in the outside market noise, including some of these political appointments.
Yeah, you're exactly right. We got the election done, and I think I was with every other U.S. citizen happy it was done and over with, and happy it was actually figured out that quickly. And I thought the trade, soybeans went sharply lower that night, and then we rebounded a little bit, had a bullish USDA report. I thought maybe we could follow up on some of that buying interest, but this week has been down so far, hasn't it? And I think you're right. It seems like every day we get another cabinet member announced from the Trump party, and it seems like a lot of them have been a little bit negative lately, and so that's putting pressure on our markets, and it's really hard for any broker to try to predict those movements like that.
Yeah, we had Lighthizer was one of them, and then Zeldin yesterday, EPA administrator, who's not necessarily biofuels friendly, and it felt like the soybean oil market kind of took its cue from that. But soybeans in general, we haven't had a lot of new export news coming at that market either, which hasn't helped, right?
No, you're exactly right. The U.S. report was bullish. We lost 120 million bushels off of our supply, so that was great. Especially surprised somebody like me who thought that yield might stay up there, but it was obviously dry and we lost those bushels. So, but yeah, you're right. Lighthizer gets announced later that afternoon, and the market starts to go lower. Of course, he was in office when we had all the trade wars, right? Or he was the trade representative then, and so yeah, we got more spillover there. But you're right. I think we're maybe going to find some support here soon. I've been hearing that there's going to be some export sales announcements coming down the road, but we haven't had those daily sales announcements is what I mean here. We haven't had them so far this week. There's rumors that China's out there buying. They've actually been very upfront saying that, yeah, we are buying your beans right now, and we're going to front load them because we know Trump's coming to office, and that means a lot of unknowns further out for us. So they flat out said that they're going to buy our beans. Now, how long they will, that's the ultimate question. But obviously in this market, with plenty of soybeans, plenty of corn right after harvest, we need those daily sales announcements almost every day to keep feeding the bull market if it's going to be a bull market.
Yeah, but do you think we can hold the $10 support area?
I actually do, Michelle. I think we're pulling back. We rallied into that report, right? We got to remember that. Now we just pulled back to some of my things I look at on a chart. The 20-day moving average is always big for me. We pulled back to there now. We've been down for a few days in a row. The funds are they're short the soybean market, long corn. I think they're kind of wondering what to do. I think if we can get like things like the US dollar to maybe peak and pull back a little bit, get some sales announcements tomorrow morning, I think the soybean market can rally off of $10.
Yeah, no doubt. Lower crude oil, the higher dollar index certainly haven't helped the last couple of days in the grains. I also wonder, though, can soybeans rally when you've got meal hitting new contract lows and you continue to see this soybean oil correction that I mentioned?
Yeah, you're exactly right. Now, we should mention that soybean oil, though, rallied sharply last week. So I think it was due for a correction, maybe just some profit taking, things like that. But you're right. I mean, the fundamentals are bearish for soybeans, right? And long term, maybe very bearish when you look at the supplies coming in South America. World stocks are still at record high levels. And maybe after the report, people were reminded of that. These world stocks are still high. The only reason I think we could maybe rally in the short term is that China comes back in here now and does aggressively buy our beans, and maybe it gets the trade just a little bit excited. And sometimes these markets rally and they're called hated rallies. Everybody goes on your show like I do and talk about the bearish fundamentals of soybeans, and they're 100% right, and then the market just does the opposite thing. And I feel like we could do that, but I do think that 1048, 1050 area that we got to last week, that's as high as I'm looking, Michelle. I'm not talking $11, $12 run in beans. They're just a short-term pop.
Yeah, no doubt. Corn market, obviously we hit chart resistance up at the top end of the trading range, but we've had good export sales. We had another 27 million bushels of export business this morning, but yet we can't get through those levels. Why is that, DuWayne?
No, well, I think this week it's because everything you mentioned, all the outside influences on corn. If corn traded in a bubble by itself, we'd probably be grinding higher because I think it's performed really well. But if soybeans are down hard, wheat's down hard, the US dollar's up high, crude oil is down hard, and corn just isn't going to do it by itself. I think has performed rather well. It got a little overbought too, and now it's correcting back just a little bit here. So, the down 3 this morning isn't great, but I think if we find some support here, I think that market can keep working and grinding higher. A few of the bulls are a little disappointed in last week's USDA report that they didn't raise export demand. That does make us wonder that maybe USDA says this is all being front loaded as well, and the export market's going to cool off come next spring. But it better, because the pace we're on is actually really good. It makes me smile. It makes me friendly at the corn market longer term.
Yeah. So you're sitting in the tractor this morning getting tillage work done, but as a farmer, when you saw the lower yields last week on both corn and soybeans, did that surprise you any?
The soybean one, it did. But I should have listened to maybe my producers more. Everyone was saying how dry the soybeans were harvested and came off. Well, if they're harvested at 8 or 9%, that's less moisture that they're selling. So I probably should have listened to that more. But I think there's some out there too that agree with me. We might have gone a little too far, and we might see some minor adjustments in January. I am surprised USDA made that big of adjustment in one swoop here, especially on the November report. That's usually a quiet report. So yeah, that did surprise me, but a good bullish surprise, I guess.
Yeah. I totally agree with you about wheat dragging down corn, and the wheat market has been making new lows for the move the last couple of days here. Technically, we look pretty horrible, but is that all about the winter wheat condition rating going up or better weather, or is it that dollar that we just talked about?
Maybe it's all of them. It's funny. We had 2 rain events. The rain event before, I was telling everyone the wheat market should pull lower. It makes sense. We got nice rains, and it didn't do much 2 weeks ago. And then the second rain event this weekend, now the market's really taking it to heart and going lower. Crop conditions up 3% in yesterday's crop conditions report. I thought it might be even higher. I look for another 3 to 6% next week. I mean, this is really awesome rain for the southern plains, right? Just before dormancy, it's going to rejuvenate that wheat. Maybe some of it finally germ and grow a little bit. So it is bearish, but you also got, Trump with his speeches out there talking about ending the Ukraine war. So maybe we're taking out some more war premium there too. But in the US dollar up to 106, that doesn't help our export market. And the dollar always seems to have the biggest effect on our wheat market.
Yeah, no doubt. It doesn't help any of our markets overall. Cattle market, we had a pretty good day yesterday, but we ended, I say pretty good, we ended off of our session highs probably. And so, is that market, is that a seasonal play, or just are the funds taking profits, or what?
A little bit of both there too. I think the biggest thing is it's a seasonal trade, but the funds were long 100,000 contracts, about their max is maybe, I guess they can go as much as 150, but they're plenty long, and rightfully so. Demand has been great, supply is light, but recently those carcass weights we talk about every time I come on your show, man, they've just gotten worse and worse. So there's more meat on every carcass that gets killed. Everything that's bought in a livestock sale barn doesn't go and get killed right away like some of these cows that should get killed. They all go back to feed, and that's just making more meat for everything. So that's how the packers were kind of getting through this low inventory cycle we've got here. But back to your question about the markets, I think it's a seasonal trade. Cash market was lower, weights are high. I think that's going to continue during the month of November. Demand is still strong, but it is a little weaker. And of course, with the dollar at 106, we're not going to export a lot of beef either.
Yeah. And as we talk, you might know feeders are starting to come back here a little bit, even some of the back months of the live cattle futures. So we may just have to move sideways for a little bit here. Sometimes we have to do that, don't we?
That's right. And that's okay. I mean, I'm talking like if D's can pull back to 181, 182, that's about low enough.
Okay. And the hog market, new contract highs yesterday were a bit lower today. Is it time for that rally to be over? I mean, are the funds going to take some profits here, or what do you think?
I think so. The funds are record long, the lean hog market, and all you have to do is look at a chart and go, well, they did that right. Now, if they can exit while the market's still up here, they did it really right. The market's rallied a lot. Cutouts and cash are starting to look a little toppy. Of course, the seasonal trade has been backwards in hogs. We're supposed to go lower in the fall, and we just raced higher, but we were all off on those USDA numbers. There just hasn't been as many hogs slaughtered as they were telling us there would be, and that's fine. So, but no, to answer your question, I think we are topping here. I do feel like we could pull back, and cash and cutouts are doing the same.
Yeah, cutouts were down like almost $4 yesterday, and so that really speaks to your point there. But it has been a heck of a ride. I wonder if we're not getting a little hedge pressure too in some, especially in those back months.
Well, and why not? $99 for next June. Looks like a good price to me. Yeah.
All right. Thanks so much, DuWayne Bosse with Bolt Marketing. That is Markets Now.